And following India's strikes against Pakistan's terror camps, global defense stocks have exhibited significant volatility. The reasons behind these fluctuations vary for each company, reflecting their specific roles, market positions, also the broader geopolitical implications. Dassault Aviation, the French manufacturer of the Rafale fighter jet, experienced a dip in its stock price following the attacks, and this volatility can be attributed to reports, particularly in Pakistani media, claiming that Indian Rafale jets were among those shot down by its forces. Such unconfirmed reports can trigger immediate negative sentiment among investors concerned about the effectiveness and the reputation of Dassault's flagship aircraft. Any perceived vulnerability of their key products can lead to a sell-off, causing the stock to fall. However, the stock showed some recovery later, indicating that the initial panic might have subsided as more clarity emerged. Shares of China's Chengdu Aircraft Corporation, which manufactures the JF-17 and the J-10 fighter jets used by the Pakistan Air Force, saw a significant surge. This increase is likely driven by the perception that Pakistan will be forced to upgrade its air capabilities. Stocks of India's Hindustan Aeronautics Limited, Bharat Dynamics Limited, Mazagon Dock Shipbuilder stocks initially saw a downturn despite the country's military action. And this seemingly counterintuitive reaction can be explained by several factors. Firstly, these stocks had already witnessed a considerable rally in the preceding sessions, particularly after the Pahalgam terror attack that preceded India's strikes. Investors might have engaged in profit booking. Secondly, the heightened geopolitical uncertainty, despite India's stated aim of a non-escalatory operation, could have prompted a wait-and-watch approach among investors. Rich valuations of these stocks might have further encouraged some to move to the sidelines. However, some of these stocks, like Bharat Dynamics and Mazagon Dock, recovered and traded higher the following day, possibly due to a reassessment of the long-term benefits of increased defense spending and potential order inflows. In fact, Lockheed Martin, a major global defense contractor and a supplier to India, might experience volatility due to the broader implications of the regional conflict. Increased tensions could lead to higher global defense spending, potentially benefiting companies like Lockheed Martin. Additionally, any strengthening of the US-India defense partnership is a result of the conflict. As a result of the conflict, could open up more opportunities for the company. The volatility observed in these defense stocks reflects the complex interplay of geopolitical events, investor sentiment, perceived military capabilities, and existing market valuations. While some companies might benefit from increased regional tensions and potential arms sales, others could face uncertainty due to reputational risks or broader market instability. The situation remains fluid, and further developments in the India-Pakistan situation will likely continue to influence the performance of these defense stocks.